I know just starting a business, taxes can sound like an entire foreign language to you. Now, the issue is if we don't get it right, it can cost us thousands of dollars. So let's talk about some simple steps as you start your new business. Now, to be clear, it really doesn't matter if you're starting this from scratch or if you had a side hustle that you've been operating for a few years and you're legitimizing it. Bottom line is we really don't learn about taxes. And even when we go to our tax preparers, oftentimes they're just trying to get us through the queue so they can say, hey, it's done, here you go. Now, ultimately for us, we definitely want to avoid any type of audits. We want to avoid penalties from the IRS, but more importantly, we want to save as much money as we can. So first, let's get clear on how the LLC is actually being taxed. So by default, if you are a single member LLC, it's just you, well, then you're going to be taxed as a sole proprietor, meaning all of that money is going to flow directly to you. If you're a multi-member LLC, meaning it's two of you, well, then you're going to be taxed as a partnership. Again, meaning the income flows directly to you. So depending on how much income it is, you'll fall somewhere on that individual income tax bracket. Then you'll not only pay income tax, but you'll also pay self-employment tax, which is about 15.3% on your profits. Pro tip though, if you start to produce more income, you can always elect as an S Corp. Okay, well, let's talk about the 3 different taxes as a business owner that you need to be prepared for. Let's go ahead and start with self-employment tax. Now, this covers Social Security and Medicare, all right? Now, typically, if you had a W-2 job, you would always see something on there that says Social Security and Medicare is taking money out of your pocket. Well, this is the government or the IRS's way of saying, you know what, you're self-employed. So you still have to contribute to both of these funds of money. Good news is it is based on your profits and not your top line income. So it's the money that you have left over in your business. The second tier is your federal and state taxes. Now, this is based on your total income after deductions, all right? And not only do you have to do the federal, we can't get rid of federal, but you also have state as well. Now, some states don't have state income tax, right? So we have our Texas, Tennessee, Florida, and some states have grossly high state taxes like California. And state rules, they vary. So you have to make sure that you look into your rules to understand what applies. And number 3 is sales taxes if it's applicable. So this isn't for all businesses, but if you're out there selling goods or products, then oftentimes you will have to remit sales taxes. So it's something else to consider. So those are the taxes that we need to be prepared for. Now, what can we do as business owners to kind of lean ahead and be prepared before the end of the year? Well, first things first, with every business, you must open up its own business bank account. Now, I say must because one, if we're thinking about legality, we want to be able to treat it as an entity, as an individual. It needs its own bank account. And 2, that's a great way to separate and not commingle between personal and business. So we want to set up that bank account. Now, once that business bank account is set up, we want to make sure we are tracking every single transaction, every expense, every income. And this is where I will say it and I will scream it from the mountaintops. Bookkeeping, 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 bookkeeping. Guys, get bookkeeping because it will save you thousands, tens of thousands of dollars in the long run just because you have accurate data. Now, a lot of people have different kind of opinions, varying opinions of how much money as a business owner should you put aside for taxes. Now, the typical general rule of thumb is 30% of your profits 30% of your profits should be set aside in a different bank account specifically to pay taxes out. Now, in addition to that is, when are we paying these taxes? Am I just kind of sitting on it all year? No, you're going to be making estimated quarterly payments. Now, do you have to make estimated quarterly payments? Do you absolutely have to? Absolutely have to? The answer is no, you don't have to. But if you don't, you could be receiving additional penalties that maybe your tax preparer is not even telling you about, right? So it's always best to lean forward and go ahead and pay those estimated tax payments. So 1, we don't have to sit on money and kind of figure out what do I do with my hands like Ron Burgundy. And 2, so we can avoid the little ankle biting penalties. And if you're wondering what those quarterly deadlines are, please be sure to get with your tax preparer because it depends on the entity. However, for LLCs, it's going to be April 15th, June 15th, September 15th, and January 15th. So keeping all of that organized, nice and neat, making those estimated payments, you're going to reduce the penalties that you have. Now, the next big thing is filing on time. Now, yes, we can absolutely file for extensions, meaning, hey, I can't file it before April, give me all the way to September. Now, the thing is, people don't understand that even though you may not get a late filing penalty, you are accruing interest on the taxes that you still owe. So it behooves us, it's in our best interest, if we go ahead and pay the taxes on time. So how do we do that? Well, we stay organized with certain forms kind of ready to go. So as an LLC owner, you are going to get something called a Schedule C for your tax return. It's going to be attached to your Form 1040, which is all good, but primarily what they are going to need, your tax preparers are going to need from you, is a profit and loss statement, maybe a trial balance sheet or a balance sheet, and maybe a general ledger. Guys, remember, bookkeeping, bookkeeping, bookkeeping. Now, if you happen to have paid an independent contractor anything over $600, well, then you're going to have your 1099 NECs filled out as well. And how do we do that? Well, we just make sure that we collected the W-9s from the contractors throughout the year. So if we're organized and we kind of have these W-9s at the beginning before we ever start working with someone, it does help speed up the process at the end of the year. Even with all of these things in hand, you have to understand that we're all at the mercy of our tax preparer at the end of the year. And it's because everybody needs to do the taxes. So oftentimes these tax preparers get bottlenecked, right? They can only do so much in the given time that they have. So the last kind of pro tip here is to be proactive and be early. You can absolutely reach out to your tax preparer in November and December of the year prior. Ask them, hey, what do I need to start collecting? Things of that nature. And then as soon as January hits, or February, because January we collect some of those final documents, you can send everything over to your tax preparer and jump ahead in that line or in that queue so we can get things done a lot quicker. At the end of the day, you did not start your business to be buried in tax work. You started your business so you can do what you want and do what you enjoy. So definitely lean on a bookkeeper or a tax preparer to really help you get your own system and process down to a science. And if you found this video helpful, then go ahead and hit the like and subscribe button. And as always, thanks for watching the video. We'll see you next time.